This video will cover how to complete Quick Study Question 5 for Chapter 4. So we have Nixit Company Ledger on, ledger is the short term for general ledger, on July 31st. Its fiscal year includes the following selected accounts that have normal balances. Nick uses the perpetual inventory system. So again, they're using perpetual inventory system. In this class, we will not be covering the periodic. It is in your appendix. Most companies currently use perpetual systems, especially since we do have computers and have scanners, and it's just not a big deal to address inventory using a perpetual inventory system. Alrighty, so it says these are the balances of all their GL accounts that are listed. And then a physical count basically means someone actually went out to the warehouse or to the store and they counted it and they did a valuation and they determined that as of the end of July 31st, they have inventory of $44,300 available. However, the records, the actual GL shows $46,300. So if you were to pull up that T account, your balance would need to be in agreement to what you actually have. So the shrinkage could occur to 1, theft from a customer, theft from an employee, or depending upon the nature of it, it could have just evaporated or been damaged, or whatever the items happen to be. Currently, the value has declined, and now we need to account for that. So what we're saying is even though the records are saying the balance is $46,300, we actually have only $44,300. So what we need to do is we need to decrease our inventory. So to decrease our inventory, we're going to figure out the difference between our unadjusted amount, our adjusted amount, and we see that there is what? A $2,000 decline. Now this $2,000 is what we're going to use for our journal entry. So we are going to, and we're going to debit cost of goods sold, $2,000, which is our expense account, and we will credit merchandise inventory for the $2,000. And that's all you're going to do. And then we'll record that entry and check my work. And we are done. Oh, no, we're not done. I was asking for one. Oh, I made a mistake. So let's go ahead and return the question. Then we put that correct amount in there. Add one more 0. And record that entry again. And I guess that's good that we checked our work before we submitted it, or we'd have to do another attempt to get our full points. After we post it, 2,000, 2,000. So our final adjusted cost of goods sold would be the unadjusted balance plus the additional 2,000. And these are the balances that we would see on our financial statements. Merchandise inventory, that would show up on the balance sheet. The cost of goods sold would show up on the income statement. We'll cover question 6 from the Quick Study Chapter 4 assignment. For Chapter 4, question 6, it has the same company information we used for question 5. Your numbers may, however, be different depending upon when you went in and put in your amounts. Alright, it says record the entry to close the temporary revenue accounts with credit balances. So based on the accounts, we have to identify what are permanent and what are temporary. This requires us to use our knowledge from Chapter 3. Temporary accounts are those accounts that appear on your income statement, including, in addition to the dividends account. So it's all the revenue accounts, all the expense accounts, the dividends account, and the income summary. Those are considered temporary. Everything else is considered permanent. So you're going to use that step process. And what might help too, I'm going to pause so you can go get your brief review. Okay, everybody should have your brief review -4. That's the very last page of your textbook, and it has a summary of the steps for closing entries. So hopefully you have that and you can follow that along. If not, you can just go ahead and watch me And I have record the entry to close the revenues. The revenues will be the sales account. So sales will have a normal balance of credit. So that 163,100 will be the amount that we will debit sales. And then that same amount, 163,100, we will credit income summary. And we'll record that entry. Next thing says record the entry to close the temporary expense and accounts with debit balances. Now this is the one that gets a little tricky with the merchandiser. The cost of goods sold is an expense. We kept saying that earlier. So this would have a debit balance, depreciation expense, salaries expense, miscellaneous expense. All of these would have debit balances. But the contra revenues, the sales discount and the sales return allowances, would also have debit balances. So you're going to include all of those as part of your closing entries. The first thing I'm going to do is I'm going to debit my income summary, and then I'm going to list my sales discounts, my sales return allowance, my cost of goods sold, all of my expense accounts, and I'm going to just go ahead and write the word expense. And so I'll list all the expense accounts, and then I'm going to put my credit amounts because we're closing them out again. So let's see, sales discount 4,600, sales return allowance 4,800, cost of goods sold. Cost of goods sold is 110,100. And next one is depreciation expense, 12,000. Now be careful if you did your expenses in a different order. Want to make sure we have the right one. 41,000 for the salaries expense. And then we had 5,000 for the miscellaneous expense. And then what you want to do is add all of these up together, and that'll be your total debit. So I get 177,500 when I add it up. I'm going to enter, check my work, just in case I did some math errors. It looks like I did. Let me see. Return to the question. Make sure, check my number is 1. Oh, okay. This is part 2 of part 2. So keep in mind that previously we had an adjustment to our cost of goods sold. So we got to remember that there's an additional $2,000 in there. So this is actually a continuation of question 5. So I'm going to go ahead and do this. Let's see. I'm going to add my 2,000 to here. So that'll make it 11,100. And because I added 2,000 to my credit side, I will have to add 2,000 to my debit side. And that should fix it because we had those adjusted amounts. So we can't forget our adjustments. So again, check my work. That's what it's there for. And now it's correct. Score and answer, and you're done. Any questions, please post in the discussion.